You finish a massive creative project. The files are delivered, the quality is perfect, and the client is thrilled. But when the end of the month rolls around, you find yourself waiting and sometimes begging to actually get paid for your work. Or look at the other side. You buy a digital product online, enter your credit card, and wait for the file. And then nothing. No email, no download, and no one to hold accountable. Every digital transaction faces this exact standoff. The creator doesn't want to hand over the files without cash, and the buyer doesn't want to hand over cash without the files. Neither side wants to move first because there is zero built-in protection. Traditional commerce solves this by placing a neutral party in the middle to hold the money. People buy goods through platforms like PayPal because if the product never arrives, they can dispute the charge and get their money back. Without a trusted party sitting between the buyer and the seller, the entire digital asset economy is forced to operate on a very thin thread of blind trust, and that trust is easily broken. The most logical institutions to act as those trusted middlemen are banks. They already manage high-value transactions and have the regulatory infrastructure to mediate financial agreements. Stepping into this role offers a massive financial incentive. By holding transaction funds in escrow during a delivery and dispute window, banks can generate highly profitable current and savings account or CASA deposits. Banks are perfectly equipped to manage stacks of money, but structurally unequipped to store and transfer complex, massive digital files. Taking possession of actual digital products introduces catastrophic data storage costs. Furthermore, hosting a file means inheriting direct legal liability for illicit content. Because possessing the product introduces unmanageable corporate and legal risks, banks have historically avoided mediating the digital asset economy altogether. FileDeli's white-label escrow module provides a bridge that allows banks to facilitate these deals while avoiding the associated risks. It lets financial institutions mediate the transaction without ever touching the actual asset. In a two-tranche system, the buyer funds in advance. The bank securely holds it, releasing upon verifiable file delivery. The remaining balance is locked for a 7-day dispute window, released exclusively after the buyer mathematically verifies file integrity and accepts delivery. Instead of an all-or-nothing gamble where one side has to blindly send money or files across the internet, the payment is released in careful, conditional phases. Breaking the transaction into isolated, verifiable steps completely eliminates the digital standoff. Creators know they will get paid for their work, and consumers are protected from missing deliveries. To actually pull this off without exposing the bank to data liability, FileDeli relies on a technical architecture called zero-knowledge cryptography. The bank holds the money, but it is mathematically blinded to what it is mediating. Before upload, the file is encrypted locally in the browser via AES 256 GCM, becoming a scrambled code block. It's securely wrapped with a 6-digit PIN that never touches the bank's servers. The buyer enters this PIN to locally decrypt the high-value file on their machine. The system then runs an automated cryptographic check called a SHA-256 hash. This compares the decrypted file to the original, providing absolute mathematical proof that the asset arrived intact and untampered with. Because the bank only ever stores and routes an unreadable blob of data and never possesses the decryption key, their legal and data liability is effectively reduced to zero. With a 6-digit PIN securing the transaction, there is an obvious security question. What happens if a malicious actor attempts to systematically guess or brute force the code online? The system handles this using a honeypot decoy mechanism. If someone enters an incorrect PIN 3 times, the system remains completely silent. This gives genuine buyers the room to self-correct simple typos without being locked out. But a 4th incorrect guess triggers a trap. The attacker is secretly diverted into a decoy room that opens a harmless, fake digital file instead of the actual valuable asset. Simultaneously, a canary protocol silently flags the transaction as compromised. The bank is alerted to the risk, and the seller is immediately forced to rotate their PIN to secure the real file. This entire back-end infrastructure, powered by Alibaba Cloud, is designed as a modular storage scheme. Banks can easily integrate the system into their existing architecture in roughly 30 minutes. FileDeli transforms risky, unregulated digital transfers into mathematically guaranteed contracts. By acting as the neutral middleman, banks can safely capture the transaction volume of a massive, previously untapped digital economy.